gonna be a fantastic day and stuff. And we're happy to be here. Welcome to you. We've had I think, one of our best runs of daily webinars for a long, long time. And welcome. I want to say hello to you. We're going to do some contests today. Welcome to Marvin. We're glad to see you here. This is our daily webinar, and I want to talk about, I don't know, maybe this is the most important session we've ever done. This could actually be the most important one that we've ever done, and I'm very excited to talk to you about it today. So Nate, we're going to run a contest today. It will be a mix of comments live. Let us know where you're from. If you're watching live or watching on the recording, just let us know where you're from. Say hello. Offer a positive, happy comment to everybody else that's here together with us today. Say hello to everybody. That kind of thing, you know? That's all I'm saying. So, and then Nate will pick a couple of winners, and we'll get in touch with you, and we'll tell you how to reach us, and we'll send you something fun like a Amazon Echo or some other cool electronic device of some kind. So happy to see you here. We'll be running that contest all session long and on the recording. So if you're watching on Facebook and you leave a comment below, you let us know where you're from, you leave a happy comment and say hello to everybody else, or on YouTube in the description below, like the channel, subscribe to the channel, like the page, whatever, do all that stuff. That helps us out a lot. We're super happy that you're here. Let's get started. I'm going to use two examples. I'm going to back into a point I want to make. Two examples, two stories. This has been on my mind today. It's funny, Nate brought something up like this earlier today, and it's funny that he did. Okay, the first one we're going to do is we're going to imagine, in example number 1, we're going to imagine a hot dog guy. A hot dog guy. And this hot dog guy, Nate, has his little hot dog cart with the spoked wheels on the bottom, you know? And he's got little hot dog steam rising up from this. And he's just standing there with a little hot dog sticker in his hand. And hot dogs are $1. So this is our hot dog guy. So hot dog guy has a little cart here. And this is not necessarily even necessarily a fictional story. There's a place in Chicago which has expanded nationwide called Portillo's, and they have amazing hot dogs and beef sandwiches and chicken sandwiches. They're amazing, and it all started out with Joe Portillo. I'm sure that's not his name. But anyway, he had a hot dog cart. And he had a hot dog cart in Chicago, and he made hot dogs, and he sold them one at a time out of his hot dog cart. And I'll venture to say that he was making hot dogs for years before he ever made any money from selling hot dogs. So let me just say, let's just do this strategy for success. So man makes first hot dog. And then step 2, Nate, a week later, man was worth $100 million.
Easy.
Does that seem like that's the way that went? It's highly unlikely that that's the way that went, right? There's a whole lot of stuff here in the middle. Okay, let's do another example. I'm going to do another example here. So that's hot dog guy. Example number 2 is hedge fund guy.
Oh, we got an update. His name was Dick Portillo.
Dick Portillo. I love Portillo's. Portillo's in Chicago is better than Portillo's anywhere else. I'm sure that anybody in Chicago will agree with that. But, okay, example number 2, hedge fund guy. Graduates in 1972 from, I believe, the NYU Stern School of Business, which may not have even been called the Stern School of Business. Gets an MBA from NYU, and then out of his apartment, someone here is going to know who this is. Let me know if anybody guesses who this is. Nate. So leave a comment. Let us know. out of his apartment in New York City, in Greenwich Village, I believe, creates a little fund after having traded commodities. So that's what this dude does. Creates a little hedge fund. Anybody guessing who this is, Nate?
Mike Novogratz?
No, but that's a great guess. Don't know who Mike is. Mike Novogratz, he's the hot dog guy at Knicks games. Just kidding. Do you see my new New York Knicks Nikes, Nate?
Oh, is that what that is?
Yeah, these are like New York Knicks. So I spent my summers and some of my winters in New York, in Brooklyn and on the Upper West Side. So I have this little love in my heart. I'm not a New Yorker, and I would love to be. I would love to live in New York, but that's not going to happen. I'm married and I live in Houston, and that's the end of that. We'll go visit New York. Okay, anybody else take any guesses?
Warren Buffett?
No, Warren Buffett. No. Warren Buffett went to Columbia, not NYU, and he graduated from Columbia in the 50s or early 60s, and Benjamin Graham was his favorite professor. Anyway,
Peter Brandt?
Peter Brandt is also a really great, I love Peter Brandt. These are all great guesses. Okay, this is, so we're going to keep telling the story and we'll let people, I love doing this, and I don't mean to hide the ball. We're going to, yeah, this is fun. Okay, so starts a hedge fund after trading commodities and grows this into a very large fund, and then in 1982 blows the beep out of the hedge fund, blows the heck up, blows up the fund, and then has to borrow $4,000 from his father just to pay his bills, just to basically pay his bills. So after 10 years in business, in the early 1980s, blows up the fund, loses a bunch of money, calls it wrong on Louis Ruckhiser's Wall Street Week. I used to watch that when I was a kid. I was a total nerd face. Blows up the fund, borrows money from his father, and then lets all of the employees go, has to start from scratch. So here's how this person's journey went, Nate. So here's the journey of this individual. This individual starts fund, and we're just going to say around 1975, after a couple of years trading commodities. And then immediately after, let's say, a couple of weeks, manages $138 billion in the largest fund in the world, right? So it's just like, it just happened. It was like, wow, look at this. I wanted to start a fund, and now I have the largest hedge fund in the world.
A couple more guesses, and I think they're right, 'cause that's what I was thinking.
Couple more guesses.
Ray Dalio?
Ray Dalio. Who said it first?
That'd be Leif.
Leif. Leif you alone. No, we're going to Leif you an Amazon Echo on your doorstep. So Leif, hit us up on Facebook. Go to facebook.com/RobBookerTrader and send us a Facebook message, or reply to any email that we've ever sent you with your full name and your mailing address, and we'll send you out an Amazon Echo. I know that some of you got this right, and we'll try to make this worth everybody's while. I hope that just having fun together is reward enough. Not everybody, you must win to play. No, must play to win. I like to say must win to play, because that's kind of like trading. Okay, so this is Ray Dalio. Alexa's telling me who Ray Dalio is. Actually, literally. That's pretty funny. That's pretty great. Okay, this is Ray Dalio. Okay, Alexa, stop. Shut your mouth. Okay, in both of these examples, in each of these examples, I was being a little facetious, but in both of those examples, these people had to walk before they ran. They had to do their time. And I am regularly asked the question. Here it is. Here's the question I get in week 1. It's the number 1 question I ever get. How long will this be going on? How long will it take me to be successful? And my answer is start by making $1 a week, then go to $2 a week. And then in week 8, let's say, totally reasonable, there is invariably, especially with people who are successful, some level of exasperation. You just change the words to the Stevie Wonder song Superstition and call it exasperation, and you've got yourself. And in week 8, the feeling is not making enough money. The feeling that you're not making enough progress, not making enough money. And you're in week 8. Now, Ray Dalio goes 10 years, and then blows up the fund, borrows $4,000, and now runs the largest hedge fund in the world and is worth between $15 and $20 billion. Dick Portillo makes a hot dog and then builds it into what is only in the last few years become a franchisable or expanded restaurant business. And yet, for some reason, we feel like trading is different. And I'm not criticizing anyone, and I don't mean to do that. I love you, but the reason I'm saying this is if you are making any amount of money at the beginning, you're doing great. And the majority of your gains, 99% of Warren Buffett's wealth was made, they say, after he turned 50. And he had already been doing it for 20 plus years. 99% of his wealth. It's some even more ridiculous statistic than that. 99% of the money you make in trading is going to come after year 7. That's not what anyone wants to hear, but it's the truth. And if you can make any amount of money and any forward progress at all, I bang on the table too much. If you can make any amount of money and have any forward progress at all, you're doing everything right. And the majority of your gains and the majority of your money is not going to come at the beginning. And if you are trying right now to, at the start, and I mean in the first 2 years, if you are trying within the first 2 years to maximize your gains or make a lot of money or speed up the process or get it all figured out as quickly as possible, it's wrong thinking. I don't know any other way to say it. I don't know how to be polite about it. It's wrong thinking, and it's not going to get you where you want to go. What you want to do is, let's imagine a scenario that now uses an example of you as a trader. So let's go back over to let's go back over here. Does anybody want this thing that I'm writing out? Does anybody want us to ship this to you? If you want it, just say, yeah, I'll take it, Rob, and we'll send it to you, and we'll do the same thing we did before. We might include a book or something in with it. So let's use the example of a trader. So let's say that you as a trader, let's say you have a $10,000 account. I don't know what you have, but let's just say it's $10,000. And let's say that you make, by the end of your first year, you're making $100 a month. And let's say at the end of your second year that you're making $200 a month. If you're making $200 a month in a $10,000 account, that's 20% a year. Now, if you can sustain that, after year 10, you could manage if you want. My guess is after year 10, you could be managing $50 million. And I don't think that's a weird thing to say. Ray Dalio started in his New York apartment, blew up the fund, started again in 1982, having learned from his mistakes, and then managed thousands of times more than this amount of money. thousands of times more than $50 million. He's managing right now 138,000 millions of dollars. $138 billion or more. Okay, so that's not a big deal. So here's what you do. You take the beginning stages to accumulate 1% at a time. Just keep building your wealth. Now you might say, well, I want to trade for myself. I don't want to manage other people's money. Fine. Fine. I don't have a problem with that. That's not the only way to do this. But you have to do this first. You have to have your taco stand, your hot dog stand, your little fund inside of your apartment with almost no investors. And then you have to learn from your mistakes. The hardest part of all of this is giving yourself enough time to learn from your mistakes. It's time. And I know you probably can't see this, maybe only barely, right, Nate?
Yeah, it's at the very bottom.
Very bottom, okay. And so time and mistakes, it's down here at the very bottom, and I know some of you can see it and some of you can't. I'd love to hear what you all think. This is very often a one-way conversation, so I want to hear what you think, and I'd like to have a conversation about what thoughts do you have based on what we've talked about today. So based on what we've discussed here today, what thoughts do you have? What comments can you make? If you're watching the recording, you can leave a comment below. If you're watching on Facebook, you can leave a comment in the section below. And if you're watching live, in particular, we'd love to hear some comments that you have. And Nate, I'd love to hear what you think about all this as well. You mentioned earlier you'd love to do more talking about the successful investing stories of history. I'd love to talk more about the mistakes and the obstacles along the road to successful investors in history.
Absolutely, and that's kind of what's triggered that thought today as we hear about what you're going through, talking about obstacles, and if we had Ray Dalio, perfect example of what he did and what he corrected. And
so if we had more examples, Nate says, of the journey that successful investors in history have made, we'd have more information. And what we really got to talk about, and Ray hits on this in Principles, and in his interview with James Altucher, and in his interview with Tim Ferriss, and in his interview with on Freakonomics. The full interview is from April, but you can listen to those podcasts and they're fantastic. But what Ray will say is pain plus reflection equals success. And that's very true of traders, that you take your greatest pain that you've ever experienced as a trader, which is probably a loss that you held on to for too long. And then you do some reflection about that trade, and then you come to some conclusions. And here's what I came to. I came to the conclusion that stopping out repeatedly was harmful to my psychology and damaging to my trading results. And so I needed to hold on longer to positions and build trades. But when I started doing that, I started holding on to losses that, because my trade size was too big, caused me a great deal of pain. So what I learned to do is lower my trade size and hang on to a trade and build a position. And I was going to eventually be right a lot of the time and build 1%, 1%, 1% at a time. And then other times I'd be wrong and I would lose 1% or 2%. Or if I got a little bit, if I made another mistake and felt more pain, I'd make a mistake and lose more than that. And over again, what we learn as traders is you can't make any substitute for time and consistency. You can't speed up the learning process and the feeling pain process. And there's the first stage of learning of trading, which is learning the words and the systems and what the chart looks like. And what most people do is they never get out of that phase. They never get out of the phase of, I just want to learn how another person does it. I just want to learn what indicators you use. I just want to learn what the rules are. And then they're learning terminology, and then they're learning rules, and then they're learning what chart patterns look like, and they never get out of that phase. And the only way you make real forward progress is by learn a set of rules and then apply them with your own money and then adjust them based on the pain that you feel, because everyone's system that you learn is imperfect, and it won't be perfect for you right out of the gate as a standard product. You have to feel the pain associated with it, And then based on that pain, do some reflection. Hopefully you'll have a mentor or someone that you can turn to. So for example, any of you, Tim, Katie, Carlito, others, in the early stages of trading, you're learning how to put the pieces together and you're learning the system. And then your exasperation and your pain that you are going to feel is going to come from not feeling like you're making enough forward progress, or having a loss that maybe you regret, or making them, and that's going to be good. It's good to feel that pain. It's going to cause some reflection. It's going to encourage you to change the recipe, hot dog stand guy. And then, based on that recipe, see how that produces results. Now, for those of you that are further along, Joel and Bill and Scott and other of the traders in my family of traders that have been $1,000 a day traders, you are feeling pain associated with types of trading systems that you've used, and that's unavoidable. But what Joel and Bill and Scott and others are doing that is so admirable is they are reflecting on that and building new recipes that help them avoid the things that cause pain and avoid mistakes that they may have made or could make in the future. And so pain or mistakes in trading, which almost everyone is trying to avoid, is actually a good thing and can instigate, when combined with reflection, progress and success. But you won't really be able to turn pain into success if you don't have someone else you can reflect on it with, or if you don't have enough experience doing it to really know what you could even do about it. And that's why time is so important. Any comments come through, Nate, as we have talked here today?
Yes. Scott's had a couple comments and questions.
Scott had a couple comments and questions. So if you go kind of sentence by sentence, Nate, I'll just repeat what you've said.
Let's see, let me find this first one. Does this apply to Finch adopters?
So does this apply to Finch traders? Yeah, okay, for example, Finch, when I sell someone my robot called the Finch, I sell the robot plus the code. This is not a sales pitch for it. This is free. I'm giving things away during this presentation, not asking for anything. I give away the code, and then with that code, traders adjust that code and make it into other versions of the robot. And I think that's where a lot of success comes from, is taking the code, making it your own, changing it to do something that you want it to do, adjusting it, maybe changing it entirely, maybe saying, I'll take some principles that I learned from the robots course or whatever, and I'll do something different. I'm even doing stuff different. So to answer that question and take it even one step further, I've been running the robot now for 3 years or so, maybe more. And now I run the robot honeymoon style. And I run it for 24 hours or even less than 24 hours, and then I close all of my open positions and keep some of the profit and push the account forward, but close all the losses. And then I'm not holding on to losing trades, which is the single greatest source of pain for a Finch robot trader. And so I traded honeymoon style. And I've heard from people who have said, well, I tried to do that for a week or so, and my profits weren't larger than my losses. And that's pain, and that's a good thing, and that should cause or could instigate some reflection, and then you can work on a way to run it or change it or do whatever in order to solve that problem. Because pain's unavoidable. Like, you're going to get stuck in some trades, even running a robot honeymoon style, but that pain is good, and it causes reflection, and that reflection causes and instigates refinements and improvements, which leads to success. And if your success, what you're going for is modest, like small percentage gains compounded on each other, you have a long and very profitable and very successful trading career ahead of you because you've given it the time. Other comments?
Yes. So follow up that one. Can a person adopt a strategy and cut short the learning curve?
Can a person adopt the strategy and cut short the learning curve? It depends on what you mean by shortcutting the learning curve. If you mean shortcutting the process of learning the terminology and learning how to identify the patterns, yes, absolutely. If you want to shortcut the process of reflection on pain and what to do about it, yes, I can help with that. But you can't substitute, there is no substitute, and anybody who tells you differently is a liar. There is no substitute for just spending that first year or two in the trenches, doing it with real money and feeling the pain associated with it. I'll give you an example of what I think most people think that shortcutting means. Most people think that shortcuts means I'll learn the system as fast as possible and then I'll start trading it with a trade size that is too big because I want to make more money, because I'm exasperated and impatient, and I have all the sympathy in the world for that. But you can't increase your trade size and expect that your life will get better. Your life will get worse. The fastest way to make the most amount of progress is, paradoxically, you want the shortcut to trading success? Lower your trade size. Lower your trade size, and all the stress goes away, and when the stress goes away, your trading improves immediately. It's the fastest shortcut to trading success. And no matter how many times I say it, I come across multiple people every day whose single greatest problem in their trading isn't that they don't know a system, isn't that they don't have the right mentor, it's that their trade size is too big. It's my problem. It's the only problem I still struggle with. Anything else, Nate?
Let's see. Somebody said, remind Rob about the 10,000 hours rule.
Yeah, so the 10,000 hour, Malcolm Gladwell's book, Blink, which I may have already given away. Here's another great book by Malcolm Gladwell, Outliers. But in Malcolm Gladwell's excellent, I don't remember which book it is, it may even be Outliers, the 10,000 hour rule, that in order to master something, you need to spend 10,000 hours doing it. I'm not sure what I think about the 10,000 hour rule. I'm not sure if that's just a fun way to talk about it, or if that's the truth. I don't know if it's 1,000 hours or 2,000 hours. I don't know. I almost think that the greater... Here's what I think. You want another shortcut? I'll give you another shortcut. Stop thinking about 10,000 hours. And let's do units of pain, Nate. Let's do a scale of, the Booker scale of pain from 1 to 100. 100 being the worst pain and 1 being the least amount of pain. Most people's happiness level from something going well is much lower than the pain that they feel when something goes wrong. Meaning we acutely experience pain and it lasts. But we don't have lasting happiness after something goes well. It's why after something goes well for us, we get a high and then we drop off very quickly and we want that high again. And we don't learn anything from success generally because that emotion is gone from the successful experience. We often learn more from pain, not because we learn more from mistakes or that mistakes inherently have more to teach us. We generally learn better from mistakes because there is pain and emotion that lasts longer. You learn more from the first time you touch a hot stove because it is so acutely memorable than you do from the first time something, the first time you taste good food that comes off the stove. That's not really a memorable, you don't learn a lot from it. But not because there's nothing to learn from the recipe of good food. It's because we often don't reflect on and treat as seriously the lessons from success because they're not tied to emotion. So if you want a shortcut, another shortcut to success in trading and in life really, is you can raise your pain tolerance closer to 100. And by raising your pain tolerance, meaning your willingness to experience and not run away from difficult stuff, and then your willingness to reflect on it. Most people avoid reflecting on painful experiences because they're embarrassing. But to the degree that you are willing to go back to that pain later and reflect on it, which most people won't do, they will brag about their successes until the end of time and learn nothing from them. because it's enjoyable and not embarrassing. They will not reflect on their painful experiences because they are embarrassing and sad and hurtful and whatever. And so they learn nothing from maybe the greatest chances that they can. So if you want to shortcut yourself one more way, shortcut success, raise your level of tolerance for reflecting on painful experiences and what you could have done differently. For example, when I'm finally out of this New Zealand dollar, US dollar trade that I'm fighting right now, in which I'm not in any significant percentage-wise trouble. So let's just say that to start with. But I'm unhappy with the trade and I've not handled it well. And I'm feeling pain and embarrassment because of it. And I've allowed myself to be openly and publicly ridiculed for the mistakes that I made, even though I don't feel that they're gigantically problematic. I've let other people take it even more seriously than I've taken it. And I've realized that I struggle with the same embarrassment reflecting on that pain. So my opportunity now, the huge opportunity that I have, is to take this pain right now that is embarrassing. It's my 1982 moment, even though I'm not at risk of blowing anything up or even remotely. But it's my moment of how deeply am I willing to allow the pain scale to go up closer to 100 as I reflect on this mistake? Could I'm doing it publicly, admit I got in too soon with too much trade size? Once again, I don't want to mistake this for some kind of giant error. I want to be careful about sort of, I would probably do some of the same trades I've done, but with a lower trade size. Well, there's my reflection, right? That's it. I'm learning from the willingness to say, I made a mistake. I was too arrogant and confident about it, and here's what I will do differently the next time. And because it's painful, if I mark this down and I record this lesson and I write some thoughts, and as Ray Dalio would say, I list some principles, I'm going to do a better job the next time. Whereas someone else might just close the trade, might not reflect on it, might actually add way more to it and then let it become a huge loss and maybe a margin call. That's what most people will do. Instead of stopping now, publicly admitting to it, writing down some principles from it, learning from the reflection, and then moving on and doing well. All right, well there we have it. I mean, that's an example of what I'm talking about. Okay, anything else come through, Nate?
Yeah, somebody was asking if you're doing a Houston conference again. They had a really good experience last time they did one.
So I did a Houston conference about 2 years ago right now, 2 years ago, a week ago or whatever. And I don't have any live events planned for right now. I've been hearing rumbles that there is an invitation to speak in London and in Dubai later this year. But I don't know if I'm going to agree to do those. I'm really enjoying my family time. I'm really enjoying reflecting on mistakes I've made time, and traveling internationally or even locally and whatever, it just wears me out. So for lifetime members, we are instituting open office hours. If you're a lifetime member, you'll be hearing more about this. We already have that for some of our folks. But if you are a member and you want to come out and spend a couple days at the office, we're going to have dates set aside where you can do that and get some individual or smaller group attention. And then at some point, we will do a live event. They're very, 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 very exhausting for me. And I don't like doing them. I don't like them. If you like them, I will probably do them again. But yeah, so it's just a matter of time. It's probably at the earliest we would do something probably in the fall. I really want to do a thing in Orlando for all of our Trading by Faith downloaders. I wrote a book called Trading by Faith, and it's biblical principles applied to trading. I know some of you don't care about that, and that's fine. And that's been a really successful, I think that video has been watched on Facebook 70, 80,000 times. And we've had thousands and thousands of downloads of that book. I think I'd like to do a one-day event in Orlando for that family of traders. That would, I feel drawn or compelled to do something like that, but that's not everybody's cup of tea.
Well, he said he could come out to Maui in June for that.
Yeah, yeah, I want to go to Hawaii. Yeah, I want to go to Hawaii. That's what I want to do. If we want to all meet, I want to go to Hawaii. That's what I want in a perfect world. But I know that's a stretch for a lot of people and whatever else. But that's what I really want to do. I just kind of I just miss Hawaii.
Yeah, me too.
I love Hawaii. Other comments, questions?
Let me see. If Rob were to start trading Finch with a brand new account, what is his confidence level of turning a profit on that account?
100. So if Rob were to start trading Finch on an account, I don't have to start doing it. I do it now. What's my confidence level that I would make a profit? 110%. I am doing that now, and it is making a profit. And you can see those videos every single day inside your members area. I'm 100% confident. It's the single greatest of any invention I've ever had is the Finch robot. And I know it's not perfect, and I know that, I'm just going to say it again. I let the robot open trades on 18 to 19 currency pairs. My trade size is so small, and I am making 1 to 4 to 5% a month. That might not be enough for some. It's plenty. It's amazingly consistent. It's the greatest ever. I love it. If you run Finch and don't close your losing trades and you let them run, then you're just going to deal with drawdown and eventually things come back around and whatever else. There are other ways to do it. It's not perfect. I did not say that. But it is a great mix of success and pain and reflection all wrapped into one, and it's running right now even while we're talking here. And I love it. And it is making profit this week and last month and the month before that and the month before that and the year to come, and a year from now I'll still be running it. And then I layer on top of that what I call trifecta trades, which are discretionary Finch trades. And I use those, do those from the longer term charts. And I layer on top of the profit that I'm making from the robot, those bigger trades on top of that, and then the account grows and moves forward and whatever else. But it's not for everyone. I never meant to say that it was, but it certainly works for me. All trading involves a substantial risk of loss, meaning pain, which means reflection, which means success. Anything else before we finish up?
Question and a funny comment.
Okay, question and a funny comment.
Funny comment. Lloyd says that running the Finch Rob style has not failed me. Running the Finch Lloyd style, I'm messing around with it, not so good.
So Lloyd says running the Finch Rob style has not failed him. Running the Finch Lloyd style has. A lot of people ask me, shouldn't I be using a stop loss? It makes me nervous not to use a stop loss on the Finch. Well, I do use a stop loss. I wrote about this and did a video about this today for our members. Every day I'm closing out losing trades. Every single day, not with a set stop loss. But the open trades might be losing $100. And then overnight I made $110. So I close everything and I keep $10. And I just keep closing everything, which is like a stop loss, and then keeping the profit that I've made. And then occasionally it gets stuck, and then I take additional trades from longer term charts to help it get unstuck, and then I move forward. That was the funny and the serious comment all wrapped into one?
Question.
All right.
This is from, I believe, a member said, I saw something in the library about old binary options, but does Rob trade with Nadex at all?
Okay, so there was something in the members library about binary options. I would love sometime in 2018 to do some work with binary options. I still haven't found the time to do that, but I would like to. And so what I've been doing is I hired an instructor to help in Spanish. So now for those of you that hablan español, we have lecciones en español from Jeremias on the robots and other things. So got that going on. And then we have Jason Smith, who I just love and respect and look up to, and he's also doing member webinars for us. That's going to free my time up to do some new stuff on binary options and other things, which I think are interesting and have potential. But I'm still going to be doing the same stuff that I'm doing. Finch plus longer-term trifecta trades. That's what we do.
I mean, we can stay here all day. People are coming up.
There's all kinds of good comments and questions. I don't know. We could do a little bit longer today because we're going to be gone, not going to be on tomorrow, no webinar on Friday, May 18th, and no webinar Monday, May 21st. I'm going to be visiting with family in Arizona. Okay.
Okay, let's find one here.
So yeah, I'm happy to. You look them up, Nate, as we go.
Okay, let's see. How much time did you spend coding robots?
How much time did I spend coding robots? So I spent time inventing robots, and then for years worked together with Wes, who was just a fantastic programmer, and Wes wrote the code for that. And now I work together with one of our members, Dan, and Dan helps to write the code for new robot ideas that I have and new indicator ideas that I have. I'm not a programmer. I understand programming, but I don't do it. And I probably never will. I say that I will sometimes, but I don't really mean it. Anything else before we wrap this baby up?
Yeah, let's see. Any plans to implement the Finch with crypto trading?
So any plans to implement Finch with crypto trading? I've been thinking a lot about implementing the robot with crypto trading. Right now the robot runs on TradeStation Securities, NinjaTrader, and MetaTrader. And I would love to get a version running that can link into an API on Kraken or another crypto exchange. I would love to do that. It hasn't happened yet, but I would say it's probably going to happen. We're probably going to do it. Right now, it's really hard to trade crypto on a MetaTrader account because the spreads are so wide. So that makes it a little bit harder. Let's send Lloyd something nice too. So we'll call Lloyd a winner also. Lloyd, if you just reply to any email that I've ever sent you and send us your mailing address, and we'll send you something special to your. And if you're watching on Facebook, like the page, like the video. If you're watching on YouTube, subscribe to the channel, like the video, leave a comment. In all cases, let us know where you're from, or say something that would brighten someone else's day. Leave a quote or leave a comment that would make everyone else's day a little bit brighter and a little bit happier. And we'll pick some more winners out of those comments, and we'll let you know you're a winner and let you know how you can get in touch with us. We love you all. We'll be back on Tuesday, May 22nd, I think that is. I don't know for sure what the date is on Tuesday, but I think that's about it. But it is Tuesday for sure. We'll be back, same time. I love you all. Thanks for being here, everybody. We'll talk to you soon. Bye for now. Did anybody even want this drawing?